Hello, traders. Good morning, good afternoon, good evening, whatever part of the world you're watching me at. In today's program, I want to do a back test. I'll be showing you a strategy. We are going to develop a strategy together, and we are going to back test it for 6 months, right? So we are going to have an inside back test of 6 months, and I'm going to explain everything that you need. So if you are watching me for your first time on this channel, remember, please, you can subscribe. This should probably our first or second, since it's our second video on this channel. So if you're watching us on this channel, please remember to subscribe, remember to like, remember to share our our video as well, and also drop a comment in the comment section if there are other things you want me to do. So in today's chat, guys, in today's chat, I want to show you a strategy that you can develop. Okay, show you a walkthrough how you can use it and how you can start with even as little as 100. So the market that we'll be backtesting this strategy on is literally gold. So we'll be backtesting this strategy on gold. I'll be showing you how to trade gold effectively with realistic profit and risk to reward ratio, and how you can take this. Okay, so this 9:17 p.m. few minutes to when the market will be closing out. So we have some few about 30 minutes. I don't think this will be more than 30 minutes long. So let's get right in. So when I'll be doing, what I want to do is that first I want to pull up my trading view here. Okay, I want to pull up my trading view here. Of course, I want to show you the strategy from trading view, but I do backtesting on my MetaTrader platform. Okay, I do backtesting on my MetaTrader platform. So what that means is that first we are going to, first of all, create a strategy. I want to use this for drawing too. So what we are going to look out on, is that we are going to do this on using a 50-minute time frame. It works on all time frames, guys. It works on 5 minute, 1 minute, 50 minute, 30 minute, 1 hour. So since I'm mostly a day trader and intraday trader, I'm also a swing trader. I don't scalp, I'm a swing trader. So what I do is that I hold trades. Okay, so what I want to do is that I want to show you the method that we'll be using now, and the method that we are going to use in this program is the HARAMI Candlestick Pattern. As simple as it is, you know me, I don't use indicator. What I do is that I trade price from naked price perspective. I want to see what is happening in the market, take market decision from what I'm saying clearly on my chart. So what I'm going to do is that we are going to develop a strategy, and like I said, we'll be using a simple strategy that has been in existence, which is called a Harami Candlestick Pattern. So what is, first of all, a Harami Candlestick means it's a Japanese candlestick pattern, which simply means pregnant. The word Harami means pregnant, to be pregnant. Okay, when we talk about a pregnant candlestick, we are talking about a candlestick that embodies itself within another candlestick. So what I'm talking about is that if we have a candlestick like this, okay, now let me say I'm going to do this for a bearish Harami. Okay, we have two candlestick pattern of this nature. We have two candlestick pattern of this nature, right? So what I want us to do is that we will not be talking about the wicks here, because I will not be considering the wicks on this. I will just considering the opening and closing price of the candlestick. So we are going to consider the highs and lows, right? We're going to consider the highs and low. So if we're looking at the highs and low, right? When you look at these two candle, a Harami is a combination of two candlestick pattern, like I said. The second candlestick after the first candlestick completely lies in between the nature of the first candlestick. Okay, so what I'm talking here is that we talk about that is pregnant woman. That means we can have a pregnant woman of this nature. Okay, like exactly, there's a woman being pregnant, so you can see that the candle is literally inside this other inside the body of this previous candlestick. So that's what a harami simply means. So what you want to look within this nature is that you are going to spot the highs and low of a market structure, right? You spot the high and low of a market structure. Like what happens here is that you literally can see that this market went down, right? Then this was the lowest point. Then market started creating new highs going back up. So when you see something like that, what you want to do around that, what you want to do around this is what you are going to do, right? You want to look exactly the lows. You want to look exactly at the low of this market, what has literally happened there before the market goes up. So Are we spotting a harami structure within that area or not? So if you come back to the structure that we are developing here, so how do you manage to trade with a pattern like this? What you need to do, this is a bearish harami candlestick, right? I mean, this is a bearish harami candlestick. Whenever you see a candle of this nature, that means the last structure that happened here was the market was bullish, right? The market was bullish, and when you see this now, there will be a possibility for the market to create a downward move going down, right? There'll be a possibility for the market to create a downward structure, and this is how you're going to take a trade. When you see this two pattern develop itself, what you want to do is to go in and go short. Okay, you want to go short. So your short now will be on that is the highest point of within the both of the candlestick. The highest point that will be the height of the candlestick, the high of that candlestick, whether it's a high from the wick or a high from the body of the candlestick. But the highest point will be a stop loss area, which we are going to mark it around the zone. Then now we have our entry exactly where this market closes, and we aim right down to where we are looking for our market to go to. In this method, what we are going to do to be much more profitable is that we are going for a 1 to 5 risk to reward ratio. A 1 to 5 risk to reward ratio is what we are working on throughout. That's my edge over the market. I trade with a 1 to 5 risk to reward ratio. That means for every $1 I'm being exposed in the market, I just want to make 5 times. Okay, I'm going for 5x that amount. So that is what it is. So this for a bearish harami candlestick. So when we talk about this right now, so let's go back on. Let me show you that of a bullish harami. Okay, let's talk about a bullish harami. Then we go now to some beautiful examples. So if you want to talk about this now, right? If you want to talk about a bullish harami, it's still the same thing, right? Like I said, it's a pregnant candlestick. It's a pregnant candlestick, right? The last candlestick, this is the signal candlestick, and this one is a confirmation candlestick. Okay, so what we need is that we need to have that confirmation from our confirmation candlestick. And now if I'm going now to buy, that means the mother candle here, the mother candle here is going to be a bearish candle, and the baby candle here is going to be a bullish candle, right? So I'm going to denote this with green. So I'm going to have this as a green structure. Then at the same time, again, I'm going to mark my highs and low. Okay, I'm going to mark out my highs and low. So marking out my highs and low point in this market simply means that when I see this, okay, there must be this point of clearance. There must be this clearance. Are you seeing the gap clearance between this? Right, there's a gap here and there's a gap. Means that when you look at this again, you see that this candle is a baby candle that is being carried by the mother candle. Okay, so that is exactly what you can see. So I literally can have my mother right there and a beautiful head. So that's exactly what I'm talking about. So when you see something of this nature, right here, this is a bullish harami candlestick or a bullish pregnant woman. So what we want to do is that when we spot a situation of this nature happening, we are looking out for possible buying opportunity, right? That means we are looking to buy, looking for a market to create a bull run. See, you don't have to be sentimental about this thing, okay? For you don't have to be sentimental. Emotions, keep your emotions at the door before you walk into this market. That's the beautiful thing. So we are going to do this for a backtest. So when you see a structure of this nature, that means you are looking for the market to create more higher highs. And this is literally a market coming from which direction? It's coming from a bearish market. Okay, that means you are spotting this from a bearish market. Then you spot the harami, right? You saw the bullish harami from the downtrend of a bearish market. Then you look now for potential buy. Then you have now your beautiful risk to reward ratio. As soon as the closing price of this harami candle plays out, boom, then you now go for a beautiful 1 to 5 risk to reward ratio. Okay, you go for 1 to 5 risk to reward ratio. That's how you are going to trade. So if you look at this market here, if you look at it, you see that we have a harami, or we have there are cases of harami that we have here. We have a bullish harami here. Okay, we have a bullish harami. You have a case of a bullish harami here. Like I said, you go for 1 to 5, 1 to 5. That's the first case of a bullish harami, and you see that we went for a target. Then we have another bullish harami here as well. Okay, we have another bullish harami along this area. Are you spotting this? So look at this last low that we have here. We have this last low when the market came down. We have the last candle was bearish. The next candle after that was a bullish candle and it was a baby candle acting in between the open and closing price of the previous candle, which was bearish. Then as soon as the market closes, we have our entry going away from that, and boom, you now go again for another 1 to 5 risk to reward ratio, and within that aspect again you have another bullish buy, again still on a Harami candlestick pattern. So I want us to go through this so that we can backtest. Okay, so we can backtest it for 6. I want you to have a real life market scenario on what it looks like I said, we'll be doing this now on MetaTrader 5. I love my backtesting more with MetaTrader 5. Like I said, I'll be using the trading view because of the drawing tools that are available. Okay, I'll be using the trading tools because I'll be using the trading view because of the trading tools, the drawing tools that are available. So when I'm done with that, we'll have a detailed walkthrough on that. So bringing you back to my MetaTrader 5 platform, my preferred broker of choice is IC Market. So right now, what we are going to do is that we are looking at gold on 50-minute time frame. Okay, so we are looking out on gold on 50-minute time frame, and what I want to do is that I want us to spot the same thing that we saw on our trading view, right? Just following the principle that I just explained before, the exact thing that I'm going to do, we are going to apply that exactly as we see. So what I want to do is that I want to just spot, right? I'm going to look within my highs and low. Okay, I'm identifying this within my high and low structure of the market. And what I want to do is that at the high, and what I want to spot at the high, I just simply want to spot a bearish harami signifying selling opportunity. And within the low, the lowest point, I want to spot a bullish harami signifying buying opportunity. Okay, so that's exactly what I want to see. So now let's look through that. So if you look through it, this is a pivot of August. Like I said, I want us to do it for 6 months. You can do it for 1 month and you literally can call the strategy lock and something of that sort. But I want you cannot have lock for 1, 2, 3, 4, 5, 6 months continuously in a row. So that's why I said I want us to have a target up to that situation, because most people really don't do back test and they are not certain of their strategy that they are using in the market. So let's go through this, right? So it's that when we look throughout, when we look through the situation through the past market that we had going forward, yeah, we have our first example here, which was literally at this point. So you see, we have a powerful bearish candle going down, right? A strong bearish momentum candle going down. Then the next candle after that was a bullish candle, and the bullish candle was a baby candle, which signify a bullish harami candle. Because if you look at the body of that bullish candlestick, what happened here is that the bullish candlestick there simply lies in between the open and closing price of the bearish candle. So we have this our first situation here, right? If you look through that, this on gold, like I said, if you go through it, you have 829, approximately 830 points, which is about 83 pips. Okay, so if you are going for 83 times 5, 8 times 5 is supposed to be 40. If you go through this, we could only get to 340 pips move, and the market came down to hit our stop loss. Why it came down to hit our stop loss is that we trade a 1 to 5 risk to reward ratio, like I mentioned before, and we don't move stop loss to break even. A loss is a loss and a win is a win. So what we do is that we calculate our potential risk to reward ratio before we take any decision on any trade. It's very, very important. So you want to also make sure that you are looking out on the market carefully before you trade. If I look within this bearish candle that I have here, like look at this bearish candle. So what I want to do is I want to place my crosshair tool. I want to place my crosshair tool right here. Okay, I want to place my crosshair tool. Placing my crosshair tool around this point. What are you going to see here? I'm talking about this bearish candle. If I put my crosshair tool at the lowest part, you're going to see that there is a clearance of this bullish candle acting in between the open and closing price of this. So what I'm going to do, I'm going to have another buyer and I have a stop loss of 13 pips. That's 130 points. 13 times 5 is 65, so 650. We see the market going for our 1 to 5 risk to reward ratio again. That was our first, second, and third trade going on right there. So we do this when the market. So since I think that my edge here over this market is that when I have my first trade playing out, I don't wait for it to get to my loss or profit before I take the second trade. If I'm looking to buy and the trade is running out and the trade keeps going in my direction and I meet other opportunities, I'll get in. I'm going in to scale. Okay, I'm going in again to scale. So that's exactly how I trade. That's why it's possible for me to go over 20% gain per month. So, but I don't want us, I don't just want to say that for clickbait. I just want us to go through it. Like I said, I want us to have a back test of this up to 6 months. That will have a real life data on that. So let's continue. So looking out on this market here, we are still looking again like on highs and low. I'll be a bit fast on this because I don't want the video to be too long. You know the concepts, right? So when you look it, what you need to do is to follow it as well. You can also try it out. Then you drop me your own result in the comment section, right? So we have another buying opportunity here. If you look through it, you have a beautiful buy here. You have the last bearish candle and a bullish harami candlestick playing out. So we have entry to stop loss zone is 932 points. That's 93.2 pips. 9 times 5 is 45. We are going for 450. Okay, we are going for 400, over 450 pips. Okay, that's it right there. So we have the market meeting our position. So it's a beautiful strategy, giving you beautiful pips as well. Beautiful, beautiful pips, guys. It's difficult to make this in gold. You're trading the normal chart patterns, okay? But I'll be showing you how to use chart patterns as well to achieve the same result. I'm going to teach you different strategies. Then you find out which one works best for you. Then, boom, you can use that as well. So like I said, I'll be a bit fast on this. We keep looking. If we can spot another opportunity, we keep looking. Finding another opportunity, we have this one, but it became a loss. We had our loss here. We took the market, it came for our loss. So we have a loss at that position. Going back, we are looking for more buying opportunity, right? So we keep looking for more buying opportunity. Looking, our attention now is only on bullish harami, guys. Only on bullish harami. If you love the video already, remember to like. You can like, subscribe if you haven't done so, so that whenever I drop a new content like this, you'll be able to watch it on time. Okay, so we have a bearish harami along this point, right? We have a bearish harami here. We have our stop loss here, and that was 17 pips. So 7 times 5, that would be 850, right? We only came down to 60 pips, right? It was supposed to be 83 pips, but we only had 60 pips, and the market came back for our stop loss, stopping us out. So we had a loss on that market. So we keep going forward. Okay, we have another bearish move. Then we have another bearish move here. Two bearish markets for a loss, hitting us on a stop loss. Okay. When you are backtesting, you have to be realistic with your results. Okay, because if you don't, the market in real time is going to take it hard on you, and you will not like that. So when you are backtesting, a loss is a loss and a win is a win. There's no need for you to modify like, hey, it would have been like this. Nah, you don't do that. Okay, so we had a bullish harami along this point here, but we had it for a win. Like I said before, we are working on a 1 to 5 risk to reward ratio. So for every win that we make, we are making 5 times our risk. That's it. And my recommended risk management on this, on trading gold, is that even 1% is still a maximum risk for me. 1% is still a maximum. We are trying to do this for a long time, right? You can only risk 1 to 2% if your capital is small. If you have sufficient capital, my recommended risk management should be 0.5% if you want to do this long term, so that at every market condition you have zero pressure when you are trading. So we have a bearish harami right here, and what we have here is that we have 15 pips. 15 times 5 is 75, right? So we have 76 pips there going. So we had a 1 to 5 risk to reward ratio there. Beautiful trade. Okay, so along this we had no other trades. Coming back from this position, we had another one. We have a bullish harami. 13 times 5, we have 65. So we had a beautiful buy again going in our direction, giving us another 5 times our risk. So we keep going forward. So we keep going forward. You trade what you see, you don't trade what you assume. Okay, we only trade what we see. There's a harami, a bearish harami right here. We're talking about this bullish candle. We have this bullish candle and this bearish candle here. If you look within that, there's a clearance, a minor clearance between these two levels here. If you look at it carefully, okay. So like I said, this is the month of August. You can also backtest with me. I'm using IC market for that. So, but unfortunately, we have a good sell there, but the market came for our stop loss, but the setup was valid as expected. So now we have another buyer hitting our stop loss as well. So we keep going, looking for other potential opportunities. We are looking for other opportunities right now. Bear bullish harami. That's what we are looking at this point. So we have a bearish harami right here. We have had a beautiful buy right down here, but it's played out because we have a bearish harami at this stop, right? We had the bearish harami here going at about 80 pips stop loss, resulting to a loss. We had a straight loss on that. We had a straight loss on that. At the end of this video, I'm going to tell you why I trade a 1 to 5 risk to reward ratio, why you shouldn't multiply it, why you should trade exactly the way I do. Okay. Remember, the bigger the risk to reward ratio, the lower your winning rate is going to be. Okay. That's eight. We have eight pips here. That's 81.8 times 5 is 40, right? We went to about 50 pips, so we had a beautiful trade right there with the bullish harami candlestick within this to this bearish and this bullish candlestick lies a beautiful harami in there. So we keep looking for another. I trade the 1 to 5 risk to reward ratio because although it took me over a year to master how to hold it up to 1 to 5, I trade a 1 to 5 risk to reward ratio simply because I want to be profitable under every market condition, right? No matter if my losses are way more bigger than my win, I will just want to end up being profitable. Most of the time, my win rate on my strategy that I develop, to be realistic on that, it lies between 25 up to 40. Sometimes I go to 60% win rate, but on average, it's usually between 25 to 45%. 25 to 45% win rate, and even at 25% win rate, I'll still be able to make at least 8% gain a month. 8% gain a month on that. So we have a bullish harami here. We took a loss on that, right? So when I'll be done with the first month, I'm going to show you how you evaluate that first month data. Then you can proceed with the rest. So if you are following up to the very end, you have the information that you need, and that you'll be able to do it yourself. So we go through it, right? We are looking at that. Look carefully. We have a bullish harami here with a loss. We have a bullish harami that way with a loss. We keep going. We have a bearish harami right here. Okay, we have a bearish harami in here, also with a loss on that. Is it clear? Then we have another bullish harami here again, also with a loss, and it's okay. Another bullish harami with a loss, bullish, negative. Like I said, this on gold, it works on every market, guys. It works on every market. It works on every market. So we have a beautiful bearish here. That's 37 pips, right? So we have a beautiful trade right down there. Boom. Okay. So we'll be done with 1 month backtesting, and you will be able to see how real the results are. So we have a sell day after this news came out. We have a bearish harami up there. and we have a negative on that because the market went back to hit us. We have another buying opportunity and the market hit us out. Okay, we had 1 year negative, bearish harami negative. You have a bullish harami here. Okay, that's 19, approximately 12 here, right? Approximately 12 pips, 12 times 5. Right, we're supposed to have it at 60, but we went way above that, so we had a beautiful win there, 5 times, 5x the risk. We have another 1 year, right? We have another bearish harami selling off at this position. We had the bearish harami there, resulting to a loss, a bull resulting to a loss as well. You have to be very vigilant when you are looking at that. So we have looking back on this downtrend, right? We have a beautiful strong downtrend going down here along this area, right? Along this area here, where we have this resistance becoming support. We have a bearish harami along this zone, right? That's 16. I was supposed to be 80 pips now. We went right down to 100. So we have another 5 times the risk at that level. We have a bullish here, bullish harami, that's 13, 1 to 5 again. Bull or bear harami is what we are looking at. Okay, we have a bearish harami there, loss. You look at that going down. A bull harami on the downtrend became negative. A bearish harami is still on this downtrend after this bull. Right, we came there with a bullish momentum candlestick taking us out. We had this again, another bearish on a negative. Then we have this as well. 26 times 5 is 30, right? So going for 130 pips. So we had that for a win. We had this for a loss. And going through this, right? We also have this, the last trade of that month there. We are done with the month of August, right? We are the month of August, we are done here. So if you go through this on behind chart, right, this is how realistic your trade is going to be. So like I said, this is 15-minute time frame, guys. This 15-minute time frame, what we want to do, remember there were some few things that we did. Our risk to reward ratio is 1 to 5. That means for every 1% we are making 5 times whatever x amount that you are risking, you are going for 5 times that risk, right? I advise you to work in percentage, work with percentage. Percentages are good. I recommendation, if you have a capital over $5,000, I recommend you work with 0.5%. Okay, 0.5 maximum rate should be 1%. Okay, because you are going to do this long term, then it's good to stay safe in the market always. I don't want you to get in a position that emotions will drive you crazy. So you just have to keep it and you trade. So now what we want to do is I want to count how many trades that we had within this month, then how many winning trades and how many losing trades. Okay, so we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44, 45. So this 15-minute time frame, and what we had is that we had 45. Okay, we had 45. We have 45 trades. In this 45 trade now, how many winning trades do we have here? Okay, we have 45 trades. How many winning trades do we have? What we have here is that we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. We have what? We have 14. We have 14 winning trades here. Okay. If you do the math here, if you take 14 away from this, you are going to have 1. I'm going to have 3. That means you have 31 trade on a loss. We have 31 trade on a loss, right? We have 31 trade on a loss. And what we have here is that if you look out on this market, right, we had 14 trade going in our direction and we have 31 going against us. Like I said, if you want to, if you are working on a risk to ratio of 1 to 5, which I make it recommended for this strategy. So 14 times 5 here is going to give us what? It's going to give us 70. That means our total gain here is 70% profit minus 31 loss. Okay, so when you take 70 from 30, how many are you going to have? You're going to have 40, right? Minus this one is going to give you 30, 39, right? That means at the end of the month, you were able to make 39% gain. Now, if you have to know the strategy is also good or bad, right? You outsource the overall win percentage to the total trader you have. Okay, so total trader you have, so that the win rate, yeah, the total win percentage that we had was almost close to the total trader we have. Sometimes we'll have it doubling the total trader we have, making this method a good strategy. A bad strategy would have been something you have, like for example 45 trades, then you ending up making like 10% or 5% profit, then you are losing the rest. That way could be a whole lot of bad trade because you'll be exposing a huge amount of capital out there. So like I said, you could be making 20 to 25. I was speaking of something 15 to 20% gain a month, but this is you making 39% in real time. Okay. You see how the maximum losses that we had, you saw the maximum profit that we also made, and you're able to do the math. So if you like this video so far, I'll end here. Okay, if you like this video so far, remember to like, share, and subscribe. Let me know what you have in mind in the comment section. See you on our next video. Bye.